Okay, hope everybody is enjoying the weekend so far. Today is December 8th, 2012. Let me do a follow-up on Google here. Just to clarify the statement that I made about the reliability of the head and shoulder and also the inverted head and shoulder. What I said is essentially it's unreliable to trade on the head and shoulder and the inverted head and shoulder pattern. Well, what I do is trade off of it. You don't want to trade based on the breakout of those patterns because they usually give a fake move, a false move on the first breakout, and don't want to make it sound like I'm a hypocrite talking about the how unreliable those patterns are. And you see me from time to time or numerous times that I refer to those patterns. And what I do is, as you recall, a lot of time when I mention those patterns, I don't mention about breaking out and go in for the trade, but basically I use those patterns to project what the target price could be based on those patterns. And when those patterns develop, I look for setup either for short or long based on the setup that I use to trade off of those patterns. So if you're trading based on those patterns, then it's very hard to do. Usually it's very unreliable, but if you trade off of those patterns, then it's pretty good to use that as a platform, to trade off of. And also the other thing is, it's better to, if you want to trade on those patterns, it's best to look at using the line chart, which is based on the closing price. Then you can see those patterns a little bit more clear. For example, if you take a look at Apple, you see this head and shoulder pattern much more clear if you use the closing price here, right? Because you could see this, right, this head and shoulder here. Because at the time, if we go back and take a look at using just a either candlestick or the open high bar chart, you can see it's kind of a lot of people thinking that maybe this is the baseline and here's the break of the head and shoulder pattern here. Then you essentially got fake out on this and got trapped up here, and you probably lose money. But if you play the close of this candle, then essentially you could see that there is a nice clear head and shoulder pattern that you could actually trade off of, trade on from, right? So you can see this right here on this break here, right? That's essentially that candle that is actually closed down here somewhere. But if you trade off of this candle here, then you would have got trapped and got shaken out. So that's one of the statements I just want to clarify. I don't want to mislead everybody and say, why the heck are you talking about all these patterns, use it to project all these price target, and then you tell me that it's not reliable to use. Okay, so hopefully that clarify a little bit on the on that statement here. So let's go and take a look at Google. And I was talking about the Google possible the price channel or the bear flag. You can see on this 5-minute intraday chart, you see this price channel kind of trending. And also the other thing is I kind of mentioned in the past about the 5-day EMA. When it rolled over and the price get below it, it usually stay down there for a while. And that kind of give you a clue where the potential direction that might be in the coming day. So you can see there's a baseline here, right, somewhere around this 682 level. And if the price break below that, then most likely it's going to be heading down. So we basically have to keep an eye on this price to see would it come back up and test this 5-day EMA. And if it does, then you've got to watch to see would it be try to do a little fake move and make it back up to this trend line, this channel here, and this declining trend line, and also a boundary of that price channel. So you got to keep an eye on that, and that's why if you are doing any kind of short-term trading, you got to look at all these intraday chart, not just looking at the daily chart to get a sense of direction, and never trade on other people's entry and exit, because even if I give you exactly what my entry and exit is, you wouldn't be sitting next to me to trade. And even if you are, your risk level might be different than mine. And I could end up making money and you could end up losing money based on the same entry and exit. So just do your homework. Like a lot of the experienced trader kind of, forewarn a lot of the novice and the intermediate trader, inexperienced trader. Do your own study and learn from your trading mistake. So don't just rely on other people, in and out and that kind of stuff for trading, because a lot of people, they don't tell you about the blown up trade. They only tell you about how well they did on the money trade, but when they blow up, they don't tell you about it. And those are the stories that you want to hear and learn from, not the one how successful they are. So hopefully this will help. Good luck to you.